Hello guys, welcome to the Trading Parrot. Bitcoin has managed to put a green engulfing candle on the weekly, setting the price right below the highest close we ever had in history. And on lower timeframes, we can see that we are printing a broadening wedge, which is currently holding support and threatening to take 109 as we speak. The order book has shifted massively, and I want to share all these insights with you. In this video, I'm not gonna cover general markets. I'm gonna do it in a separate video that is gonna come out right after this one, together with the rest of the altcoins. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Thanks so much for the 4.8k views on the video from Saturday. I hope you enjoyed the 45 minutes of weekend alpha. But now that we have pre-market prices and things are starting to develop on the Bitcoin price, we have a weekly close, fantastic, and we have as well an approaching monthly and quarterly close for Bitcoin. So we need to do a little bit of catch up in here to understand the current strength of this rally. Very valuable information if you are not just a swing trader, daily trader, but also if you're an investor in Bitcoin. If you want to join my trading competition on Bluffing, there is a link in the beginning of the description right below in this video. You can join to be part of a pool of $4.2 million if you join my team. Or if you get lucky, you can also win a Tesla Cybertruck by joining with the link in the description, or actually opening a new account on Bluffing and getting the 10% cashback or the $3,000 in future bonuses. You're definitely helping the channel as well. Thanks so much for that. And as you can see, as we approach just 3k below the all-time high, and you can see the attention that Bitcoin is getting is ridiculous. We are at 17. That is lower than in April 2025. So the theory of Bitcoin hitting new highs, bringing retail, is kind of a little bit delusional at this time. It feels that the higher Bitcoin goes, the less retail there is in the space. Recently, when I go to my Twitter, it's full of cats, memes, bot accounts, and losers. There is almost no TA. And I mean it. Literally, I go to my Twitter and I get disappointed that there is really nothing for me. We had a spike in interest on all coins closing the previous week, and we came back from where we came from. We are now back at 32, more or less at the lows of interest in all coins as well. And I'm interested in this article particularly because it's something coming from Charles Edwards, founder of Capriol Investments. I believe that he is the creator of the hash ribbons indicator, among many other indicators that are very, very popular and successful as well. And the headline says Bitcoin price stack as OGs are dumping on Wall Street. Let's have a look at that, because if you remember, we've been seeing long-term holders actually accumulating, but this indicator is quite limited because it considers long-term holders to have held for 155 days or more. Let's see what the article actually says. The article says that OGs, long-term holders who have been dumping on Wall Street and unloading their positions since the spot Bitcoin exchange traded funds launched in January 2024. The amount of Bitcoin that was acquired in the past 2 months by 6-month holders cohort has been surging. Unfortunately, the chart doesn't have a lot of contrast, but you can see that in each of these rallies, it was the 6-month holders that were accumulating during that period. Definitely that produced a pump out of the megaphone pattern, and at the moment they continue to accumulate. As you can see here, they have slowed down a little bit at 108, but you can see a completely different attitude from this different cohort. They're actually dumping since the moment we got at around 73.5. They continue to unload. There is not a lot of detail in the article, so I believe that this cohort is obviously longer term than just 6 months, but possibly the people that were accumulating at the very lows of the bear market. At that point, they started accumulating aggressively into 28, and they finished their accumulation at 73. At that point, they are starting to dump. Something that is very natural, and they do every single cycle. That doesn't mean that we have to put an all-time high by today, but you know that you are in a bull rally and that they are going to continue distributing into shorter term cohorts like the 6-month holder, and ultimately that is going to end up breaking the cycle and eventually entering into a bear market. Something I'm noticing that we haven't retraced more than 50% of what was accumulating, and they're kind of slowing down their distribution at these levels, interestingly, and I will be expecting that they are actually distributing a lot more, because we have at the price at these highs of 108, they were actually distributing more at 73 or faster. We can see the big whale explorer order directly from Telegram, I encourage you to have a look at my Telegram link in the description. Do not search for my Telegram group because you're gonna find one of the 100 imposters and scammers. Today, I went through Twitter and there were hundreds of accounts with similar names like Trading Parrot 1, 2, 3, 4, 5, TL, A. It's impossible really to chase them all. The only thing that can stop them is if you use the links that are in my description. Whenever you get contacted by them, go to a video, check the description, check if it's the right person. On Telegram, there are hundreds of people being contacted and sent videos with deep fakes of me talking in proper English. How weird is that? If your imposter cannot say higher highs or zero, therefore is an imposter, just skip. The day that they get right my sexy accent is the day that you guys are all screwed. Let's go back to topic, and the aggregated interest in here, you can see that is potentially putting a breakout from this flag. We already said that we broke down from the ascending trend line, which is bearish, but as long as we remain like a bull flag, if we can put out a breakout there, we could see a revenge rally of the open interest that will look something more or less like this, and the price should pinch the highs if we manage to succeed and on the daily time frame to hold at these levels without faking out back to the downside. A fake out will look a lot more like we put a new low, and it will definitely indicate that the price is about to also lose the lows. We are sitting at 2.76% for the month of June, and today is the last day of June. We're gonna have to look at the CPR levels to anticipate what could be the price action for the month of July. Bitcoin price at the moment on Binance is 107.5, and we have a new CME gap that we are gonna analyze right now. You can see that we are consuming the CME gap. From one implementation, we should stop around here, so there is a little bit left over. From the second implementation, it points towards a little bit lower. But let's see those prices in Binance so you don't get confused with the premium of CME. On Binance, you can see that there is about $300 to complete it. With the second implementation, there is a little bit like $630 to complete it. But this line that is in here is our second CME gap. So we have one that we are in progress, a second one located as 106, and then we start with the party of CME gaps that spans all the way to 21K. You can tell that we counted 6 CME gaps and we are now consuming the 7th one, which I will consider it almost gone. There is a lot of liquidity at 106. I wouldn't say a lot relative to what we have on the top, which is more, but decent enough for potentially putting a wick into 106 and finally getting rid of it. I have updated the Bitcoin status, as you can see. As I promised, the weekly turned back into green. We'll look into that chart to see everything that has changed. Remember that I share this slide with my Patreon community so you can see it in real time every time I take some notes. I think the most important thing on the 4 hour is the current battle between bullish reset or a bearish divergence. Remember that when there is a bearish divergence, people tend to say, oh, that's actually bullish because it constitutes a bullish reset. And there is a very thin line between that interpretation. People with a bias that is bullish obviously are saying, yeah, this is a bullish reset, price continues up and the momentum is resetting, we're gonna carry on going higher. But actually, technically speaking, that is a bearish divergence. So what makes them think that is not gonna apply this time? And I guess the difference is to do with where, in which range of the RSI the reset is happening. We'll talk about that. Hopefully you can take away something cool that you didn't know before. So on the 4 hour, it's been a lot of sideways over the weekend. We pinched 108.8, almost 109, and we've been trying to do that for a while in this range in here. As you can see, the price has managed to put higher highs and higher lows relative to the previous lows. So the structure of the price seems bullish. The bull flag seems to have broken out, but the performance has been a little bit flat in my opinion, because if this is the flag, the handle, and this is the flag, we should have, gone to the target of 115. But instead of that, we are being very humble and barely taking the highs and kind of struggling with the order blocks that are on our left. While we do so, the RSI is putting lower highs and lower lows, as you can see, following the trajectory of the descending trend line in here. We should have used the momentum from 54 to go way higher and continue putting higher highs in the momentum, but instead of that, we got into 67, which is obviously lower than 71, and then put a new low at 55. 52. Our support is 48.20 at the moment, and in the price that is precisely 107k. So if now the price was to break 107k on the 4-hour, we get a decent chance to close the second CME gap below us. There is additional motivation to go slightly lower, but we'll talk one by one. Just keep in mind that magic number 107 is support on the 4-hour. If we came back down to retest our second motivation, which is the anchor VWAP from the all-time high, that you can see that so many times we broke out and we lost, broke out, lost, broke out, lost, and one last time in here, and in this range we are battling to hold that level. So that 106.2 is really key to hold. We could consider that around Friday we actually did the retest, but there is about $300 of separation. So some people are gonna say, well, we did the retest. Some other people I say, no, not yet. And I think obviously if we break 107, our current support, we are definitely gonna test the anchor VWAP. At that point, what I care the most is whether we're gonna hold it for the first time in all this range, or if we're gonna do another journey back into the anchor VWAP on the bottom end at around 102.3. After all, most of the liquidity on the lower end is there. We'll look into that later in the video. And that 73 target now on the top of the range is located at 111,690, which almost perfectly matches the last order block that we have in our agenda if we want to put all-time highs. The month of June has been extremely boring for price action. We came from a May where we were already ranging in these prices, and in June we did nothing but repeating that formula, being slightly below the pivots, slightly above, slightly below, and when I say slightly, I mean not even going to the most conservative targets of support and resistance in the model, which were 113 or 94.7. We kind of dodge both sides so far for the month of June. There's a day and hours to do something more interesting, like achieving the target of this breakout and getting into 111, or breaking down and continue putting lower lows on the daily time frame, which is currently the case. If we were to put another lower low, that should be somewhere below 98k. With a month like this, we should be expecting that July is going to bring volatility. After all, there is loads of positions with stop losses above the price and below the price. I will say the most significant one is above the price, and general markets are pushing the price higher. I will expect the pivots to be somewhere around 104, and if we start on a virgin month, going to 104 and testing that level is something that we do more than 90% of the time in this model. I wouldn't expect the pivots to be above the price because we didn't come from above, we came from here. So by doing the calculations of the pivots are gonna be somewhere between the price and the previous pivots. Since we didn't touch support or resistance, we don't have an actual leading formula to say, well, we just touched the green, we should touch the green again in the next month, neither with the red. But the last time that we touched a green line was in the month of May, and it feels like we still own the fact that we should touch one green line. I suspect that the next green line is gonna be slightly higher, maybe at 114. So let me put my expectations and let's see by tomorrow if I get something right or something wrong. I like doing this forecasting of CPR pivots and sharing them with you guys. So what's going on the on the daily time frame? Well, we've been for some days trying again to break out from the top of the range on the volume profile. On a Sunday we managed to break out, which is not something I want to hear. I rather that we break out during the week for obvious reasons, and on Monday we are coming back below that range. I wouldn't call neither for a long or a short based on purely this, because there's tons of fake outs in this range. All we are gonna do is we're gonna place support and resistance accordingly. I remain in my short, and if we go to higher targets, I'm gonna scale up, but I'm not gonna scale up just because the price moves 1k or $500. I really need a decent move up to scale up. So resistance is at 85, support is at 47, next support right below is at 38.68, and then 25.75. Let's have a look at those values in the actual price. Well, that 85 is pretty much at the moon at 136k 40.40. First support on the daily is around 104.7, second support is at 100.9, and the let's go to hell kind of level is 90.1. That is more or less around the bottom of the range of the volume profile, slightly higher. And it is the weekly time frame that is taking most of the spotlight today. I think this is a big achievement in my opinion. We have put a green engulfing candle that is bullish. 2, we have reclaimed the support that we just lost of 104.4. We spent 1, 2, 3, 4, 5 weeks defending it and we lost it. By putting this candle and closing it so close to the highest closing price in Bitcoin history sets a lot of pressure on this new candle now to put the actual breakout and go beyond 109 and have fun liquidating all the shorts up until 116. Scenario 1, we do that. Scenario 2, we do that and we completely sold off and we end up closing A, below 109, B, below 104.4, C, below 98. That is kind of the bitter scenario, right? We kind of put a new all-time high, but we see a strong rejection. The lower the rejection, the worse. Obviously, the actual bullish case is to go take that liquidity and defend 109, stay above that for continuation. After all, we are in a similar situation to this. From some point of view, is a little bit more dramatic, this fall in there, but we are also seeing here a green engulfing candle on the weekly, and then we have a follow through, and then an even larger green candle, and all of that brings positiveness. As soon as we start slowing down and rolling over and kind of coming back for retests that close below previous levels on a weekly basis, then gray area and the doubts starts spreading across the market. Since we just closed the weekly, let's do a proper analysis on the weekly for upside. We've been since around March talking about a revenge rally into levels of 74. Since we have retracing here, I have to update the targets because obviously this line cannot go backwards into 74, into that area to meet with the resistance. Instead, it needs to go somewhere in here and maybe meeting around 72. Now, if we have the strength to do the full revenge rally of the lost support in here, we could go actually into 77.5. So these are completely new levels. Before they were more conservative, but since we are showing some strength, we need to keep those numbers in mind. And we have 123.4 for the first target, if we can do that, and the second target is 138. Notice though that the MACD has started to come down, at least when it comes to the histogram. The moving averages are still pointing up. They were threatening with the bearish cross, but that got cancelled out with the most recent close from last Sunday. And if we continue on that trajectory up and we hold that 109 and we enter price discovery, we could get ourselves a bullish cross from below 80, which is quite rare, to be honest. We tend to have those bullish crosses where we remain in the top of the range above 80. Here there is a counter case. You can see that we put the bullish cross in October 2021 and we went back into the top of the range at 97. That happened in this area in here of the bull market right before putting the last all-time high. After that, we got the bearish cross and we went into bear market. And I guess that's why many influencers are talking about a move up pretty decent, but the last run is what most of the influencers are talking about. Of course, there's a lot of outliers there as well, talking about Bitcoin going into $1 million by the end of the year and stuff like that, but we're gonna ignore those for now. The monthly time frame also looks pretty decent for a monthly close. If we were to close like this today by end of the day, we have a decent May that actually broke out the previous high and the previous close, and now we have a follow-up with a green candle again. The only thing I don't like, guys, is the volume to continue to decline. This breakout was below the average, this follow-up is below the average, and the way you can interpret that is in two ways. The bearish way is to say, well, there is no follow-through and really it's a dead end. The bullish way, kind of opium kind of approach, will be, well, the liquidity is actually located at around 115, and to get that volume candle to spike, we need to get there, just like we did with this candle that we have the confirmation on the 1st of November, but then the upside was very limited after that, just 12% more. So if you wait for confirmation, you actually get very limited upside and a decent drawdown. The previous rally had a breakout confirmation around 42, and that gave better confirmation. So I will expect that if we go into 115, we should be seeing some move down with some disappointment. That is my bias. Let's see how things are looking for leverage squeeze. After all, we have plenty of sell signals. I told you this is bad quality and it had just a performance of 2% to the downside, which is pretty poor as expected. But now the longs are getting into 71. The percentile bind is at 83, so there is 10 more points to get into the top to potentially potentially get another signal. In here, we didn't get the LS2, but we were very close to get it. Over the weekend, there was decent profit taking with 103, but that hasn't stopped the price. We are still within a capitulation event from the miners. There has been no changes on CryptoQuant when it comes to the metrics. We are back in grid at 66, and let's look at liquidation levels. As I mentioned, 109 is very heavy, and it seems to be just in range if we were to repeat the same move that we did in here and in here. That could take that 109. After that, we have the moment of decision, because there is a vacuum at 110, as you can see there. Notice that I'm only highlighting high leverage. 50 and 100x tends to attract the price a lot more than the other levels. So if we get into 109 and we carry on far beyond 109, let's say into 109.7, I will start to feel a little bit suspicious that maybe they want to also go for 111 and 112, just because they already went into the vacuum area that is not supposed to be attracting the price. But if it does, well, tricky bastards, maybe they want to go for 112 too. If I add 25x and 10x, then we get tons of liquidity that gets into 115k, as you can see in here. Now, going back into the degens, which tend to attract a lot the price, we can see that 105 has a decent amount of liquidity in case we needed to take a pullback. What could attract the price? And I guess that's the question. 105 seems very attractive. 107 seems like a little bit of liquidity in case we were too bullish to go that low. On the longer term liquidity, of course, we keep all these levels right there, and we have the liquidity hand, and the target to go there is still in place. Below the price, 97 in the area of the 94's 93 is there in case we need to put a new low. Remember that after all, we've been placing lower lows on the daily. This seems to be a breakout that if it cannot retest, then there is an option to go for a new low like that. And if that's the case, we got this candidate or this second candidate for an initial target of a lower low. Of course, you can go to here, but I'm not gonna count on that because it's way less likely. We're talking about below the 90s. For that, we need general markets to put a double top and a complete failure of the previous week rally. In liquidation heat maps, the past 3 months are calling for 84 being the largest liquidity, but of course we have this low-hanging fruit that I believe we need to deal with, and that is despite of bearish or bullishness or anything. I think we are just too close to that to let it go. But make no mistake, we have left liquidity like that in the past untouched, at least temporarily, and then went back to it after a few months. 30 days, you can see 109 is the largest. That is the big boss at the moment. It is the same level I'm showing you here is reachable. If we remain within this megaphone pattern, we could do it very quickly. Below the price I mentioned, the 106 on trading different is little, but if we are too bullish, we could just go there into 107, 106, take the CME gap from the previous week and some fair value gaps I'm gonna show you later. If we go deeper into 103, that is the second largest level at the moment. And over the weekend, despite these moves ups and down, we have very mild liquidations. We remain in that area where there is literally nothing really substantial. If you look on the left hand side, these peaks in here, I am expecting at some point to see a big red candle of liquidations as high as this one there that could confirm that we are now in the season of liquidating shorts. Funding rates are a little bit split out between negative and positive. Let's go into hybrid capital later to see the overall average. Bar chart shows some decent resistance on this area in there, which is 110. In terms of how much liquidity is that, is 50 million. It has increased substantially the resistance at 110, and 120 also has around 50 million. In between 115 has 35 million. Below the price, there is just tens and single digit million support. So that means that we continue to have that lack of support. Brown wells have been accumulating in here. Orange size, which is retail, most of them are pointing up, so they are buying this dip. And purple wells are pointing down. They're not very interested in this specific retracement. Aggressive buyers have been since the lows of 98 coming back in a steady move up. So far there is no pullback. This looks like a breakout of aggressive buyers if we carry on in this direction. You can very easily pinpoint in Market Monkey Terminal the levels that are more substantial on the right hand side. And now that we are in high block capital, let's do do proper analysis. We're gonna do some surgery to the order book. You can see that the longs are still very low in this area. Just a few hours ago, they were just at 33. That's a new low for the amount of longs. It increases into 37, but it remains in the lows where there is a lack of interest. And when it comes to that resistance on the top of the price that we saw all throughout the weekend, reaching levels of 0.20, this decline in here, the big question is how many of them, which are located at 5% away from the price from here, actually filled their order. So 5% spreads to about 112, and the price moved up and we saw a decline in that ask liquidity. So how many of them closed their position before impact and how many of them actually got filled those shorts? You can see that definitely with these two moves up, there has been a decline in the red area here of resistance. So we have less resistance, 5% up from the price. That could be interpreted as something positive, but as I say, it depends. How many of that went away because they changed their minds and how many of that is actively now in a short? Well, I don't know. We will have to look into the open interest, but it's a tricky one. We can just speculate, I guess. And over the weekend, we were seeing very low percentiles of defense in the price action, really not wanting to commit to put any limit order below the price from traders over the weekend. That is natural over the weekend, but now we are in a Monday and we have 39, which is better, 52, 57, and 24. The ones that are actually beyond 50s are just 1 and 2%, which makes sense. We see them here. There is a decent support at 107, and then the resistance is a little bit higher. The delta puts a little bit the longs in slightly higher risk, but it's just 82k, so I wouldn't expect that that's gonna help a lot to drive the price lower. We have a fair value gap now above the price ending at 108.2, and we have a very small remaining of a fair value gap at 106.3, the one I was mentioning before. These two guys are still there, not yet being able to convince the price to fill them. So in a nutshell, I will say that on the 4 hour we have a bearish divergence that calls for some additional retracement. We have some good candidates to go into 106, 105. Many people are going to disagree with that and say that this is just a bullish retest. That is fine. In fact, I don't need to be right to remain in my position. My position is I am scaling up short as we go higher at critical levels, and I will let you know in my Patreon once and if I do that. If we went below 106 or 105, I'm also gonna consider to place a stop loss at break even and start trailing with that in case we go slightly lower. I am expecting though that during this week we should get the job done with that, at which point possibly I'm gonna have a second order in place to short the market. If we go lower in the price, let's say into the pivots of the month of July, and I see strength along with taking profits from my current short, I might enter a long again. All that information goes in the videos in Telegram and Instagram and Twitter, but always my Patreon community is the first one to get informed and they get a nice article in their email. If I don't change anything, well, I don't send any updates. You also get the summaries of videos like this one straight into your email just for $10, and that helps me paying salaries of my team so they can edit my videos and all of that, and I can focus on sharing the alpha with you guys. Thanks for watching. I'll see you in the next one. Bye bye.